Okay. So good afternoon, all. My name is Sandeep Kumar Biswal, and I work at NISM on the digital learning department. On behalf of NISM and our course partner Crisil One Academy, let me welcome you all for today's webinar. And you know what the topic for today's webinar is? It is career prospects in credit underwriting industry, which is exciting for all of us here to know about. Incidentally, NISM and Crisil One Academy jointly offer three online courses. Apart from this credit underwriting, there are also two more courses that we jointly offer. One is on wealth management, and the other is on ESG analytics. Right. So we have a guest speaker who will take you through today's webinar in detail about the profession, and we'll talk about a lot of things on credit underwriting. But before that, before I introduce our speaker for the day, let me just briefly introduce you to NISM and the e-learning offerings that we have at NISM. So as some of you may already know, NISM is a public trust which has been established by the Securities and Exchange Board of India, that is SEBI, the market regulator. And NISM carries out a lot of activity in capacity building and various other levels like certification and training. And the idea is to professionalize and enhance the quality standards in securities market area. Right. And if you would have seen NISM's website or its social media handles, you would have seen that NISM offers a lot of e-learning courses, right? Currently, we have around 65 e-learning programs, some of which are free for all of you to go and consume that course and get a certificate. Okay, all of these courses are available in our LMS, which you can directly go and check out. And the URL for our LMS is online.nism.ac.in. Right. So in this LMS, you'll see around 65 courses. Apart from the three courses that we jointly offer with Crisil, we have courses that that has a wide range. We start from the basics of financial literacy to advanced and highly specialized courses on mutual funds, equity derivatives, fixed income securities, alternate investment funds. We have courses on anti-money laundering and forensic investigation and a lot more, right? So I would encourage all of you to go to NISM's LMS online.nism.ac.in and check out these courses. With that said, just allow me to give a quick introduction of our speaker for today's webinar, Mr. Jogasis Chaudhary. Right. Jogasis brings extensive experience in corporate banking and risk management. Currently, he is an associate director at Crisil and has been a seasoned banking professional. So he has significantly contributed to the field of risk management by ideating and developing risk solutions. He works on the challenging issues at the intersection of credit, enterprise, and liquidity risk encountered by various financial institutions, right? So Jogasis will take you through the session, but before that, let me just quickly tell you that we will be taking all of your questions at the end of the webinar, right? So we request all of you to put your queries through the Q&A section, okay, Q&A board. Go there, put all of your queries. At the end of the webinar, we'll find time, and our speaker and all of us at NISM Crisil One Academy will be able to answer all of your questions, right? So without taking any further time, I would like to hand over the webinar to our speaker now. Jogasis, over to you.
Thank you, Sandeep sir. Thank you for your kind words and a very warm welcome to all the participants. So I appreciate you all for taking time out to join in this webinar on NISM and Crisil Certified Credit Underwriter. But before striding into the specifics of the program, let us start with a quick glimpse of what the fundamental tenets of credit and underwriting means, what it embodies, what is the edifice like, and what are the career opportunities specifically, and what makes underwriting as a profession so indispensable to the economy. So I'm sure the answers to these questions will enable us to comprehend the ecosystem better, and which I believe holds promise to be a very exhilarating and very immensely rewarding career path. So I like to share a few of the slides which we have put together. Yeah, to the first slide. So what is credit? Financial institutions like banks, non-banks, funds play this role of an intermediary. And I'm just explaining this given the fact that the enrollments that I've seen for this webinar extends a lot into the student category who are probably relatively little versed with financial institutions as such, because their idea is primarily theoretical. So I'll just give a brief hint of how the financial institutions work for the benefit of the students specifically. So financial institutions, banks, non-banks, private funds, equities, venture capitals, everyone plays basically the role of an intermediary, wherein they collect the surplus of the savers and mobilize it to the spenders. And this is simple. And debt happens to be the vehicle to accomplish this specific economic transaction. Credit, in the banking sense, is this methodology of extending debt. Credit quintessentially deals with this domain of finance wherein debt can be extended in an economically acceptable format. So when I say debt, I mean all the vehicles through which debt can be extended. It can be loans, it can be securitized vehicles, it can be structured finance vehicles, it can be bonds, it can be anything. Various other ways in which debt instruments are run. But in an economically acceptable way means that the entire spectrum of financial, legal, risk, regulatory aspects and move with the underlying contract of the loan. So credit as such, you can fathom, turns out to be a very critical function of the economy. And that's why I can assure you that this field of credit underwriting specifically turns out to be one of the most thrilling and enviable work experiences for any individual who's associated with BFSI industry. Let us check out some of the opportunities in terms of numbers, some of the opportunities which is intuitively understood. Roughly, the industry numbers are around 20 to 25% of the bankers undertake uh, roles which are either directly credit underwriting or somehow in a shadow way assist credit underwriting. Someone who takes it further, someone who gives the backward linkage, so that forward and backward linkage constitutes at least 25%. So out of every 100 individuals who are working for in the BFSI sector, 25 is a good count for you to estimate the numbers or number of people associated directly with credit. And for bank enthusiasts, in India, we have around 15 lakh bankers, public and private sector banking institutions, everything combined. So banking institutions. And at 20% or 25%, you roughly see around 3 lakh individuals who handle credit uh, every day. There is a flux, 5% at the minimum. Of course, it's beyond that, given the growth of our economy. It is much beyond that, but conservatively considering 5% to be a year, easily gives a figure of 15 to 20,000 direct banking jobs on an yearly basis. And this is, please bear in mind, just the figures of the high street banks that you see. We have not considered the small finance banks, the NBFCs, alternate funds, consulting companies, research institutions, rating companies, credit scoring companies, and a host of others who assist. And in no capacity are they of any lesser importance than the banking institutions. In fact, the role of analytics, technology, alternative financing, private credit is growing at such an immense pace that it has overshadowed banking in the past couple of years. At least that's been the trend. So credit and credit underwriting is a hot cake, and that's undeniable, unquestionable. Now, let me show you a JD of an underwriter's role. So this is how roughly the job description of an SME level credit analyst looks like when you search out the job roles out there in the website. And as a student, you may not be completely conversant with every concept of it. Maybe you have learned it on the with your books or with the theoretical orientation that you have. but you may not be versed with the exact on-job duties, the desk responsibilities that you are to take care of. So I'll just take you one step further. How does the day in the life of an underwriter looks like? What kind of responsibilities do underwriters undertake? So this underwriter's role is basically financial and non-financial analysis. And on the basis of that non-financial and financial analysis, they recommend unbiased decisions on whether a credit decision is to be undertaken. And this requires constant learning. This requires constant learning through every source. So, say for instance, there's a credit underwriter, he has to prepare a credit note. So she needs to understand financial aspects, the business model, the non-financial aspects, has to be conversant with macroeconomic headwinds and the industry trends, gauge the management's competence to pull off the business that has been thought of, that has been projected, and they have to undertake site visits uh, for factories, interact with the management, ask difficult questions, and say if it's a manufacturing entity. So they'll have to go and ask, why is this specific manufacturing process being followed? Why is that alternative not being adopted? Why is this electricity set up in this certain way? What are the productivity numbers? How does the top line and bottom line get affected? How does the finances reflect every operational efficiency that is employed? And this is just about a basic manufacturing setup. If he ventures into a services setup, the questions would be different. The understanding would be different. For a real estate, it would be completely a different domain altogether. So, for every sector, credit underwriting has a critical role to play in terms of extending debt, in terms of analyzing the financials, in terms of understanding the non-financials, in terms of understanding the management, the forward and the backward linkages. And any iota of doubt which the credit underwriter has is to be addressed very clearly in the note, and thereafter a decision is to be taken. The mitigants have to be addressed. The decisions have to be augmented with reason, logic. So the point I wish to highlight here is that as a credit underwriter, you probably need to know much more about a business than probably even the business owner his own self. So a business owner might mostly remain impervious to, uh, will not probably look into many other details critically in a negative way, in a pessimistic way, and in an introspective way. But you have to analyze it because since you are extending debt, you probably constitute 70% of his balance sheet instead of 30% which he has invested. So a business owner comes in with equity, he invests say 30% of the funds, and he demands something like 50 to 70% of debt financing. Maybe you are comfortable to extend that, but logic, good reasoning, good financial sense has to guide that decision. And where do you get all these decisions from? It is via constant learning. It is via learning of every aspect which defines your decision, which eventually would complement your ideas. So that's about it. And that's how the role of credit writers is quite indispensable to the economy. Now, credit underwriting being the anchor of decision making. So the knowledge of financial analysis is to be employed across any critical role, and they are very, very indispensable in the entire BFSI count. No matter what career path you may choose within the BFSI industry, in full possibility, at some juncture, you will interact with the need to understand, to comprehend credit. And this is a phenomenal challenge. Since you don't run the business, but you're expected to know it better than the person who's running the show. And is it possible? Yes, absolutely, it's possible. And it's not only possible, it's not even a choice, it's your job role. Maybe the perspectives would differ, but your expertise, your ability, the way you envisage the future of the enterprise must cut across and shine through. That's absolutely important. So you can well understand how critical and responsible this role is. And does this sound daunting? Does this sound enthralling? Does this sound adventurous? And I'm pretty sure that all of you would find it very important and very, very enthralling. It's a process of constant learning. And how do you pick that up? How do you learn all of it? How do you become a true champ in the world of investing? So, success as an underwriter, in order to write a credit proposal, the underwriter must be, of course, competent in analyzing financial statements, business projections, borrowers' positioning within the industry, business model, and a host of other things. This requires a very specialized educational preparation. This is exactly where we believe that NISM and Crisil can join forces and have launched Certified Credit Underwriter Programme. This is the program which we believe is absolutely important for any future professional who intends to embark on this journey of credit underwriting. The program aims to equip credit officers with strong conceptual understanding as well as the ability to apply judgment. It has real life case studies, market data, insights, and analytics. So, let me share some interesting details about the program. This is a certification program. It's an online self-paced program with a total learning time of 50 hours. The course is across 7 topics and 23 subtopics that covers almost the entire gamut of credit and life cycle. The content is exhaustive. It has a very nice build up and it has a flow. So um, I'll just move to the next slide here. So it starts off with macro environment, debt markets, and regulations. I hope you can see my screen, the slide that has been put up. So it starts off with macro environment. It graduates to credit risk assessment frameworks. Thereafter, it moves to financial analysis. Capital market and the plethora of debt instruments are analyzed subsequently. And when I say capital markets, they deal with a variety of debt instruments. Those instruments can be purposeful for project finance, for term finance, and also working capital finance. And working capital happens to be a little different from term finance and project finance, and it has different concepts involved. So that's how financial analysis in Section 3 is a little different from what you did in Section 5, which deals with working capital financing. So working capital finance is a separate segment altogether. Small businesses have a different dynamic into play. When you look into a corporate or a mid corporate, and when you look into an SME segment, of course, the lines are blurring with the definitions being changed, but there's a lot of difference in the way you approach your thoughts towards financing a small enterprise, an upcoming enterprise, and something which is much more mature in its vintage. So that is being taken care of in Section 6, which is small business loans, and PSL deals with priority sector loans. Those in banking would probably be conversant with PSL as a term, but anyways, it constitutes roughly 40% of the Indian banking balance sheets, because as per Reserve Bank of India guidelines, priority sector loans must constitute 40% of your advances. So that is also a very important segment within the banking domain. So that is what Section 6 deals with exhaustively. Once you have extended credit, that's when credit operations documentation becomes very critical. Also, credit analysis and this entire domain can roughly be divided into two very specific segments, and one is pre-sanction and another is post-sanction. Section 7 deals with all these post-sanction responsibilities. So pre-sanction, every kind of decision-making, the logic, the development of financial and non-financial analysis and management competence and everything that you see across sections 1 to 6 is the entire section dealing with pre-sanction. But once you've taken the decision to extend credit, is wherein kicks in the rules and responsibilities for credit operations, documentations, security creation, very important for Indian landscape. And this is exhaustively dealt with Section 7. So that's about the 7 sections. These are all interactive cases, modules, and these are impregnated with Crisil's proprietary frameworks. They have our case studies. And once you have completed the modules, you become eligible to appear for the examination. So the exams will be held at quarterly frequency. The exam duration is 3 hours with 150 MCQ questions. The minimum criteria is 60%. On clearing the certification exams, you're awarded with the NISM and Crisil certificate. What is also very important is you earn a digital badge. So a digital badge helps you showcase your credentials with your colleagues, clients, employers, and also has social media visibility. It works on the principles of blockchain and is digitally verifiable version of your certificate. So you don't have to now carry that certificate all along to show your credibility. So this adds a lot of credibility to the earned credential. So that's basically about a summary of the program. That and this brings me to a brief halt with my presentation. I'll be happy to take your questions, but let me hand over to my colleague Himanshi, who will take you through the content. So once you have an understanding of the content, I think you can field better questions out. So over to you, Himanshi.
Thank you so much, Yogesh. This was very insightful for the participants, I believe, and I hope they've understood the crux of this course and the entirety of the certification program, and how and why this course will help them through their credit underwriting journey. Right. With this opportunity, it's my pleasure to take you all through the content for NISM and Crisil Certified Credit Underwriter course. I will soon be sharing my screen and take you all through the modules and how they look like. Right. This entire course, as Jogashish mentioned, comprises of 22 e-learning modules, which is bifurcated in seven major areas, which are the part of this course. These modules have a duration of about 50 hours that you can take, and the access is available to you for over 2 years' time. I will share my screen with the content, and if at all any of you are facing any issue with the audio sharing, you all can put in the comments and we'll work around it. I hope my screen is visible and you can see the course on screen. Right. So as you see on screen, these are the seven modules that we spoke of. Each of these modules, for example, the first one under macro environment is covering macroeconomics, introduction to debt, banking, NBFC sectors, and so on. There's one on credit assessment framework. There's another on financial analysis with introduction, analytical adjustments, multiple case studies. There's around capital market debt instruments, working capital financing, small business loans, and security documentation. So, just to give you a brief on these modules, the modules that I'll be displaying or that are covered as a part of this course, these are very interactive in nature. They have animations, they have interactivities, click to reveals, knowledge checks, and a lot of resource articles and market related data trends that can be found as a part of the course coverage. To start with, I'm taking you all through a module on credit risk evaluation framework. So this, what you see on the screen right now, is what we term as a module map, in which you all can navigate through multiple topics inside the course. On clicking on each of these topics is a subtopic that is appearing on the right hand side of the screen. And the module also covers various resources that you can later download and keep it for your reference as well. In this module, at first, if you see a concept like credit risk evaluation framework, wherein, as you were able to see on screen, is also covering Crisil's rating framework, it might look daunting, it might look complicated at the first go, but we've covered it piece by piece. So, through an example, let me show you how we've led through this topic.
Crisil uses a comprehensive credit rating framework to assess the credit quality of a company and determine its rating. So what exactly would Crisil need to assess as part of this framework? What would you consider if you had to give someone a loan? Let's look at an example. This is Tony. Tony is an old college acquaintance. His love for experimenting with flavors combined with his extreme sweet tooth made him quit his corporate job and set up an ice cream shop. Just this month, Tony devised a new do-it-yourself project using an ice cream mixer arrangement he devised. Once this is rolled out, buyers will be able to customize their ice cream using various mechanisms to get exactly the kind of cream, flavor, fruit and toppings they want. Tony seems to have
I believe there was some issue with the screen sharing. I'll quickly reshare it again and play the audio. Right? Okay, so as I was speaking, I did refer to a module map earlier, which is this what I was speaking of, the credit rating scales, the framework, and on the right-hand side, the subtopics that you see. I will quickly play this animation for your reference now.
Crisil uses a comprehensive credit rating framework to assess the credit quality of a company and determine its rating. So what exactly would Crisil need to assess as part of this framework? What would you consider if you had to give someone a loan? Let's look at an example. This is Tony. Tony is an old college acquaintance. His love for experimenting with flavors combined with his extreme sweet tooth made him quit his corporate job and set up an ice cream shop. Just this month, Tony devised a new do-it-yourself project using an ice cream mixer arrangement he devised. Once this is rolled out, buyers will be able to customize their ice cream using various mechanisms to get exactly the kind of cream, flavor, fruit and toppings they want. Tony seems to have had decent success during the past year and wants to set up a few more branches. But he needs some capital to begin. Would you lend to Tony's?
So the question that mostly arises after this animation is, would you lend to Tony's? Now, if you are in a situation like so, what are the criteria that you might consider if you had to lend to a person like such? What is his business model? Is he reliable? Is he honest? And so on. And such questions wherein you have to do or get involved in an interactivity basis that come across maybe an analysis of your answer is something that is used in this module to drive your attention and to ensure that the concepts you are going through retain in your head. There are multiple wrap-up sections towards the end of each module, which also ensures that there's a quick practice that you take up after the end of each module and that all of your questions relating to each of the topics covered in this module are answered, and then you see your progress throughout. Similarly, there has been other modules as we speak. There is another module on working capital financing, wherein advanced topics like financial analysis, working capital products, and so on have been covered. I will take you through another module, which is non-fund based financing. So this module on non-fund based financing largely talks about letter of credit and bank guarantees. So the entire LC from right from issuing to the closure is a very complex workflow. And we've explained this through a click to reveal interactivity. I'll play this process flow for your reference. See, in this entire space, you can click on each of these icons. There's a process that you see on screen and its description that goes on. Okay. Now the process is visible on your screen. If you see, this is the LC process that we were speaking of earlier. I'm clicking on each of these icons, wherein if you see the arrow is navigating to the next step and the description of the same is appearing on the right-hand side of the screen. Similarly, the entire complex process flow has been designed and developed. As a part of this content, as I already mentioned, there are a lot of case studies and wrap-ups that you would see at the end of each of these modules. Case studies is also a very crucial part that we've covered in this entire course. And I'll quickly take you through the case studies as well. This is a case study on Astral Limited. For these modules, if you look at the left-hand side, the detailed information about the company is given. If you scroll through it, you'll be able to see the details around it. I'll click it for your reference. There are certain product details of the company that are mentioned, and so on. So it's an entire case study as we read through it. Towards the end of this case study is again the knowledge check part of it, which is both in an MCQ and a descriptive sort of method. In an MCQ, as we all know, there is a question to which there are answers. And if you give an answer, you select an answer. For example, the answer I selected here was incorrect. So the correct evaluation of the same is also provided to you on the same screen. Right? I'll click it for reference. If I also move ahead to another type of question, which is a descriptive type of test, Here, in the first one, we have provided some data points, and the participant needs to select the appropriate points for determination of cost of production and then submit on the click on the submit button. So let's say I click a few of these icons for reference and I click on submit. So the analysis for the same is then provided. If I move ahead, in this particular question, you are supposed to enter the figures in the headers related to working capital consumption, the dates, and related comments to it. So let's say I am entering a hypothetical number, and then I have some of my comments here. I click on submit. This again gives me a detailed analysis and also the real answer that could have been right for this particular question. So I assume you all have had a glimpse of how the modules look like. Unfortunately, there have been some glitches with the screen sharing part, but however, the idea was to convey to you how the modules are there, the interactivities they have, the kind of animations, interactions, and ease of access that you would have while you consume this content. You will also have a lot of resource articles that we will, that you'll find out when you enter this course, maybe read through it, and additional resources and market data that in hand you'll get with this course. With that, I think we've shared a lot of information with you, and there's a lot more that we will share with you over your emails as well. And now let's move on to the Q&A section. There are already a lot of questions that we have, and I would like to invite the speaker for the day, Mr. Jogashish, to address your queries. A lot of your queries will also be immediately answered in the chat box as well. For rest of them, you all can definitely put up your entries and we'll try to answer them on the webinar.
Yeah, thanks, Himanshi. Right, I do see quite a few questions, but most of them are factual questions. Okay. Okay, one of the questions is, just one sec. Since the questions are streaming up, I'm unable to fix myself on Nika. One question is this program for underwriting of debt loan taken by individuals or corporate clients? This is primarily for corporate clients. This deals with MSME and corporate finance as compared to retail finance, because just for the orientation, in case the students are unaware of it. So retail finance is the finance which you extend to the retail markets in the form of education loans, housing loans, personal loans, equipment finance, and stuff like that, which you see in the basic market. So that's basically the territory of retail finance. Assessing that is a little different ball game, but when it comes into corporate finance, it is about extending loans to business enterprises, and business enterprises can be of different levels. So you right from the MNC business with thousands of millions or billions of business to the neighborhood kirana shop. Everyone is your customer, and there is a different perspective which you have to employ towards understanding all these audiences. This course deals with that because this is way more tricky and way more intricate, and that's where the role of an underwriter is perhaps much more important. So yeah, that's basically the domain in case that answers the question. You can just field more questions in case I've left something which intrigues you. Can any person from non-finance background take up this course? Yeah, absolutely. I mean, this is basically the context so that any person who is relatively uninitiated to the subject can start off from ground zero and still understand the entire contour. So that's very much in the mind. But yeah, from a non-finance background, what is important is your intent. A. Two, what is also important is that you want to join the financial world, the world of finance. So these skill sets are very important in the PFSI sector. Is this important anywhere else? Yes, it is. But for those roles come to you automatically, it's not something probably I can suggest you as of now. Say you are a part of a manufacturing industry, the finance department of a manufacturing industry or a services industry, and you're working in the finance department. So you report to the CFO, or you are the CFO, and you have to solicit financing for to run that organization. You have to understand the subject really well, even in order to interact with the financiers. So you would know what those financiers have thinking, what their questions can be, what their idea pattern would be, and you have to address them objectively, succinctly. So yes, people from both financial as well as non-financial domain, with or without any understanding of finance, must understand credit, given the fact that credit is so important for you to thrive, to exist. So credit is that paramount, and it must be pursued by everyone in the corporate. But yeah, you should primarily be looking into financial jobs. So that's roughly the. Is this course available in hard copy? No, it's not. It is an e-learning course, and it is delivered in the form of e-learning modules. You have plenty of resource articles as well, which Himanshi just exhibited a while back. So even those are primarily linked with the course. So those reference materials are something that you land up once you are accessing the course. But yeah, it's not in the form of hard copy. I mean, given the fact that all these concepts are best elucidated in a dynamic environment rather than static pages. So you have plenty of books on finance. That's an uncalled demand in the market. We do not sense that is an unmet need. I mean, you have those books, but those books do not really suffice the job requirements once you come down to the desk of underwriting, or come down into the credit department of a bank. And that is where this course speaks out. It stands apart. Otherwise, academic courses also it does, are available, and the relevant books supporting those academic courses are also plentiful. Is credit underwriting a full-time profession, or could be pursued as a part-time or additional job? No, it is an absolutely full-time profession. It is a full-time profession to the extent that it is two professions combined. I mean, at least any good day, a credit underwriter has to work 12 to 15 hours his desk, on his desk, on the field, everything combined. So it's not even, it cannot probably be put up as a part-time undertaking. I don't think so. Can I directly give the exam if I'm familiar with these topics? Uh, you may not actually, like, you'll have to undergo all the modules, because these are e-learning modules, and they necessitate you to move through all the screens. We try to compel everyone to go through the nuances of it. And I'm pretty sure that once you even embark on this journey, you would see and appreciate the research that has gone inside it, the frameworks that we work with, the way Crisil as an institution understands the nuances of credit. And of course, we were working with NISM. So the joint intelligence of both these institutions combined is what you see the extract in this course as. So it's, even if you're familiar with the subject, with I believe that, I think you would find it very purposeful to go through all the modules and understand the delivery. And thereafter, of course, you can take the examination to graduate through. Is the certificate a license to practice as credit advisor? It isn't a license. You do not have a license to practice as credit advisor. So, yeah, someone has raised this question. Omkar has raised this question that he is a data analyst and he wants to switch over to credit section with morning with his firm. So, yeah, absolutely. This is bang on for you, because as a data analyst, of course, you'd be dealing with financial stuff, uh, the stuff that your organization deals with. But if you want to graduate to any responsible role, uh, which deals with debt, equity, investment, credit, this is paramount. This is very important for you. Given the fact that, of course, I've explained to you how credit functions, and even roughly you have an estimate of it. Once you understand the subject better, you confront anyone with authority, with the detailed understanding of what's being dealt. So yeah, it is absolutely important that you complement your knowledge with this practical course. So just some course which can help reading the balance sheet, ratio analysis, balance sheet assessing credit. Yeah, this is what this course also deals with. It's all about balance sheet, ratio analysis, and credit assessment. So the respective modules that I gave you a glimpse of, and thereafter Himanshi took you through. It extensively gets into all these aspects, and as I said, that it's not the treatment is not like a book wherein it's theoretical. The treatment here is very practical, so it moves across dynamic screens, and then that's when you see the interlinkage happening. How does the revenue statement, how does the profit and loss statement intertwine, and then how do you see it to the cash flow statement? All these three combined, where does it move as a credit decision? What are the risks involved? How do you address that? And then thereafter, how do you underwrite a proposal? So yeah, so all those aspects which you have highlighted here, balance sheet, ratio analysis, assessment of credit, completely. That's what this course is about. Working in mutual funds industry. Yeah, in mutual fund industry also, so these concepts are around they're employed across debt products. So yeah, business valuation, very important business valuation proposal. So I think yours is not exactly a question; it's a statement. So I concur with you. Yeah, it's very important for mutual fund and valuation too. Yeah, I think these are many questions. I mean, they're best addressed. These are very objective kind of questions. The information of it is largely available in the website link, and of course, all of everyone would be also addressed via respective answers. So we'll mail the answers to everyone who's raised the questions. Mostly factual, so I think that would probably not require me to speak on it as of. All right, Sandeep sir, and everyone. I think that should bring us to the end of this session today.
Yes. Okay. Good afternoon to all again, and brilliant session, Jogasis. Behalf of NISM and the Crisil One Academy, let me just propose a formal vote of thanks, of course, to you, Speaker Jogasis, Himanshi from Crisil One Academy, my colleague at NISM, Saili, and to all of you who have been part of this webinar and made it a huge success, right? And as I have also seen on the charts, most of you are students, and as Jogasis has explained, different career opportunities that you have, especially for credit underwriters across BFSI industries, may it banks, might be insurance companies or rating agencies. I'm hopeful that some of you will take some time out and make efforts to do some desk research and know further about this topic. With that said, let me thank you all again for being part of this webinar and making it a huge success. And we look forward to having you again in our next webinar. Thank you all.
Thank you, Sandeep sir. Thank you, everyone. Thank you. Thanks.